caught up with the IMF a month ago. They're predicting non-financial sector debt to reach 300% of GDP by 2022. What can they do about the trajectory? Because it's certainly not flattening out.
No, well, what I feel has been happening is over the last 18 months, the government's balance sheet has deteriorated, and actually the SOE listed part of the equity market has actually improved, something we've seen in Japan over the last 12 to 18 months. So the actual equity risk is actually falling in the system at the moment. It's all going back onto the government's balance sheet. And I think that's going to be very much the state of play over the next 12 months when they start to do the reforms.
So when Standard & Poor's say that financial risks are increasing, are they looking increasingly at the government and not the wider economy?
I agree, yes. I think the reality is that there's been a very big switch in who's actually taking the bulk of the risk anymore, and it's actually less in the equity market and listed companies and more with the government's balance sheet.
So Julia, as you look at this, is it a different situation in China? Is it different from everywhere else because they so much fund their own debt? The Chinese savings rate is so high. Does that reduce some of the risk?
Look, I mean, I think a credit bubble is a credit bubble. And yes, it will manifest itself very differently in China because of the closed capital account, because of the current account surplus. But it is nonetheless a macroeconomic problem. And what China's been seeing over the most recent explosion of debt is exactly what Europe did and the U.S. did in terms of maturity transformation, shadow banking. It's out of their control now in a lot of ways. And so I think the numbers are large. And eventually that chicken will come home to roost, and the question is when. Of course, timing that has always been the biggest challenge.
Well, as I said earlier, President Xi has made no secret of this. He recognizes the problem, and he's trying to bring it for, I would call, a soft landing.
Right.
How difficult is that to make that transition without other disruptions?
It's hugely difficult. I mean, we saw them do that a couple of years ago. They reined in credit, they tried to cut capacity, and it ended up looking very close to a hard landing. If underlying measures of growth slowed very sharply in 2015 and 2016, and then they allowed that credit back out of the barn, and it just exploded again, and that's what's fueled the growth.